Good morning and welcome to Stock Market Today. It's Tuesday, December 18th, 2018, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan Russo _CMT, and if you're over on StockTwits, I'm there as well under the same handle, at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics, and you can sign up to receive a free email. Follow along with this show. Head over to chaikinanalytics.com/today. So U.S. equities were down in Monday's trading, with the S&P 500 logging its lowest close of the year. All sectors finished in the red on the day. Treasuries were stronger across the curve. The dollar was weaker on the major crosses. Gold finished up 80 basis points and oil was lower, with WTI crude ending down 2.6% and settling below $50 a barrel for the first time since October 2017. And as I said, all of the sectors finished in the red on the day. Your relative outperformers were financials, industrials, energy, and materials, while your underperformers were the defensives, REITs, and utilities, along with consumer discretionary and consumer staples. As we get to the desk this morning, though, S&P futures are up 40 basis points after the index closed at a 14-month low yesterday. Asian markets were weaker overnight, with Japan down 1.5%. European markets are mostly weaker as well. Treasuries are extending their recent rally, pushing the yield on the 10-year down to 2.83%. Dollar is lagging on the major crosses. Gold up 10 basis points, and WTI crude down over 2.5%. And as we kind of dive in, you can see yesterday's action. We tested the February lows, so support now near the 25.30 level. First resistance comes into play near 26.30, but that interim high at 28.15 is still the key level for the bulls as far as I'm concerned. It's getting further away, but that's really the level that would change the trend and indicate that the bulls have regained control of the market, but we have a lot of work to do. And obviously, some resistance levels as well as the 200-day moving average stand between current levels and that 28.15 key level. RSI momentum does remain in bearish ranges and is actually moving now towards an oversold condition. And with the sell-off yesterday, Chaikin money flow dipped ever so slightly into a bearish reading. So we'll see if it can quickly snap back. As I said, the futures are up this morning, but that bearish reading is something that we need to start to pay attention to as far as Chaikin money flow goes. So your market in a minute, if you're following along in that email at home. Key points, what I'm talking about in my note to Chaikin Analytics clients today: S&P 500 test the February lows. And the selling, as I said, was widespread as all sectors finished lower on the day. Gold, we said gold was up 80 basis points. It was a safe haven as capital flows to the commodity. Leading sectors appear extended on a relative basis. And it's Tuesday. I do my relative strength work on Tuesdays by looking at the sector levels. And the groups that had been leading, utilities, real estate, healthcare, on a relative basis, they do appear extended and could potentially see some consolidation or a little bit of profit taking. Futures do point to a higher open, however, as we get to the desk this morning. Diving in now on the power bars for the major indices. Dow. Dow was the relative outperformer yesterday, down just less than 2%, but only one bullish or very bullish stock for four bearish or very bearish stocks. Deterioration across the board for the power bars in the major indices. S&P 500 down 2% yesterday, 21 bulls to 125 bears. NASDAQ and small caps were your underperformers. NASDAQ, 6 bullish or very bullish stocks, 26 bearish or very bearish stocks, and small caps just continue to deteriorate. 93 bulls for 508 bears. Flight to safety gave a bid to bonds, took yields lower. And according to the Chaikin Power Bar, large cap stocks and small cap stocks are strongly bearish. Major indexes are mixed to bearish. Our stock of the day now, auto-generated stock of the day in that email that you receive based on the Chaikin Power Gauge rating. Today's stock is a telephone and data. It is a utility, a telephone utility company. Ticker symbol TDS closed at 33.20 yesterday, down 3.26%. As I said, the defensives, utilities and real estate really underperformed yesterday. But let's dig in and work our analysis here. The Chaikin Power Gauge rating for telephone and data is very bullish due to the very attractive financial metrics, very strong price volume activity, as well as positive expert activity. As we look at the chart now, we could see TDS is a very bullish stock with a strong trend and a strong industry group. It's been on that very bullish rating since the July-August timeframe, and shortly thereafter, the market and model got into agreement. Stock's been outperforming since late July and continues to do so. Above a rising long-term trend line, nice uptrend. Stock is currently oversold, but what gives me pause, especially in this environment, especially given that these leading defensive groups appear extended on a relative basis, is this money flow. What we want to see here now is see if support holds around the $32 level and it begins to consolidate and money starts to flow back into the stock. This intensely bearish money flow, as the stock was making highs, gives me pause. I don't want to chase this stock here just because it seems to me that institutional investors, as we get into the end of the year, are booking some profits on some of these winners. I think you can wait for better setups. I don't think you necessarily need to just go out and blindly buy these stocks. I think you need to run through the analysis. And as I run through the analysis here, we check most of the boxes, but that money flow really does give me pause. So I'm adding TDS to a bullish watch list. I want to see stabilization, and I want to see investors start to come back to the stock before I really can have some conviction to add it to a portfolio. Looking now at the sector tracker, movement over the last 5 days for the major sector, and it really is a sea of red. And yesterday kind of highlighted the fact that there was really no place to hide. Comms, staples, and utilities are outperforming. Real estate, healthcare, and discretionary are underperforming, but the sea of red really should give investors pause here as we're testing a key support level at 25.30. Continue to still want to position defensively for our best chances of outperformance, but I really do think we can be selective with our long ideas. And in some of the names that have been persistent, some of the groups that have been persistent underperformers, we can look for opportunities when stocks become overbought to sell them out of the portfolio or even open bearish positions. So that's kind of it. There's no way to sugarcoat it. It was an ugly day yesterday with no real safe places to hide. Our industry in focus today is aerospace and defense services, which over the past 6 months has been a roughly inline performer. It's outperformed the S&P 500 by about 55 basis points. However, that power bar ratio, which measures future potential, is very weak. It's currently ranked number 18 of 21 subsectors, and it's moved down 10 slots over the past week. And you can see here, no bullish or very bullish stocks, 4 bearish or very bearish stocks. Some of the indicative names there: BWX, ticker symbol BWXT, has a very bearish rating. Harris has a bearish rating. HRS, that is a little bit of a special situation though. Some M&A there. Mercury Systems, bearish rating. MRCY, nothing really actionable to do in these bearish stocks right now, but let's walk through for educational purposes and take a look at BWXT. Very bearish stock, weak trend, weak industry group. So at the very least, we know this is a name we do not want to own. And as we kind of walk through our analysis further, we can see why. Been on a bearish or very bearish rating for most of the past 12 months, and persistently so since the mid-May timeframe. Early June, stock begins to underperform the market. So market and model are in agreement to the downside. This actually has the makeup and all the hallmarks of what we would define as a classic Chaikin bear. Very bearish rating, underperforming the market for some time, and now we're starting to see the money flow become intensely bearish. Stock is oversold, so it doesn't look all that compelling to enter a bearish position here, but I do think you want to add it to a bearish watch list and potentially look for opportunities to open a bearish position in the stock. Just don't think the setup is there. Trend is clearly down below the long-term trend line. 3 out of the last 4 earnings reports have surprised to the downside. So BWXT, just not a name we want to be considering as a potential long idea. Looking at what's trending now, I got to be honest, there wasn't a lot of company-specific news out there to drive these gains. AO Smith up nearly 3%, very bearish stock, maybe an opportunity to lighten up some positions. Same with Martin Marietta, MLM, up 2.85%. Lam Research, there were some positive notes from the sell side yesterday on semi-cap equipment, sent Lam up 2.6%. Microchip, a very bearish stock, up 2.3%. No real news to speak of there. And HIG, Hartford, up 2.23%. 3%. Again, no real news to speak of there. Xerox down 12%. I went digging. No real company-specific news, just general weakness in the sector and with that stock. WRK down 9.4% as they caught a downgrade. Some negative data points on container boards sent PKG down 7%. ADS highlighted some data. There was some data out of the industry highlighting increased delinquency rates. Investors didn't like the sound of that, sent that stock down 6.9%, and Twitter down 6.8%. Getting wrapped up a little bit in some of these social media names as news about Russia's interference in the election via social media continues to weigh on investors' minds. Twitter had been a bright spot in the social media space, but gives it back yesterday, down 6.9%. So kind of diving in what we're talking about today in our note to Chaikin Analytics members, defensive sectors were sold yesterday. Here's that utilities group. We've been talking about it for a while. It's been a major outperformer, and you can see on an absolute basis a nice steady uptrend since the bottom here in June. Above the 200-day moving average, but as we ticked here at $57, just look at the sharp sell-off yesterday. Pulls the fund back into support. Chaikin money flow for XLU does remain bullish. And on a relative basis, the stock continues in a nice uptrend. The one thing that I can say again is that these defensive groups, and we'll take a look a little bit further, have just become extended a little bit on a relative basis. So a little bit of a pause, not unexpected. The trend is still up, but I don't think we want to chase them here. I think we want to give this some time to settle out on both an absolute and a relative basis before looking for some names within these leading groups that have become oversold. So we're going to wait right now. Gold outperformed, lending a bid to the miners. We don't talk about gold all that much, but it really was a safe haven yesterday. And here's GDX, the Van X Vectors Gold Miners ETF. You can see it kind of made this bottom here in September. It's been steadily grinding higher. It's retaken the 50-day moving average, but is still below the declining 200-day moving average. As we've seen an improvement in the price trend, we're actually getting a little bit of a momentum confirmation as the RSI makes a series of higher lows and appears to be shifting into bullish ranges, while Chaikin money flow is exhibiting a little bit of a personality change. We've gone from these deep bearish readings to now seeing some bullish readings, and GDX does have a bullish Chaikin money flow reading currently. So maybe worth keeping an eye on some of the miners as the trends start to improve. Company-specific level, not seeing all that much from a Chaikin perspective just yet, but I do try to catch these trends and these themes as they're transitioning. And this appears to be one that could be in the process of transitioning. So it's one that we'll be paying more attention to. Just take a look at gold right now as a potential safe haven bid. And as I said, leaders are extended on a relative basis, and here's what we're talking about. I could have used utilities, I could have used healthcare here, but I'm using real estate to illustrate the example. On a relative basis, here's the XLRE relative to the SPY. Nice move higher, but trading into resistance, a little bit extended from the rising 200-day moving average. So wouldn't be surprised to see a bit more consolidation here, especially into this resistance level. RSI still solid in bullish ranges, and on an absolute basis, the trend does remain higher, but you can see the weakness yesterday really pulled the fund back into a support zone. So that's something we're going to keep an eye on, see if those changes, if that trend is changing. Doesn't appear to be right now. This kind of just looks like a pullback on both an absolute and relative basis after a strong move higher and some strong outperformance. But obviously, as I said, we want to catch these trends as they're transitioning, so we'll be watching it closely. And just looking for some stock ideas today, I do think Federated Investors looks interesting. Beaten down name, ticker symbol FII, has a bullish rating, strong trend. It is a weak industry group, but a lot of industry groups are weak just given what's going on in the marketplace. Dynamic Duo in gear. Stock's been outperforming since late October, and now we're on that bullish reading. Stock is oversold, but money flow is bullish. We are above the trend line, and we do have price-based support around the $22 level. I think if you are looking for a potential long idea that has the potential to outperform, you might want to consider Federated here, ticker symbol FII. So that's going to wrap it up for today. Sign up for the email, chaikinanalytics.com/today follow along with this show and get free stock ideas. And we will see you here tomorrow at 9:15 a.m. Have a great day, everyone.